Welcome to the first edition of the Unnamed Show, where we talk about all things related finance. Today we have a special guest. His name is Neo. Neo is a blogger with over 2,000 followers, which really know his stuff around finance. So maybe Neo, you can kind of introduce yourself.
Ronnie. So yeah, I'm Neo. So I'm currently writing a blog on mainly stock investing. So I've been doing dividend investing for many years ago, since many years ago, and I think my focus when I'm writing the blog, right, is to show everyone how how do one person, right, can actually build up the very stable dividend portfolio that give you consistent return over the years lah. Right. So I've been like I practice like extreme transparency. I even share what is the stocks that I'm holding, what is the entry price, so you can just reference it in my blog there. Right. So yeah, thank you, Ronnie, for inviting me today into this session.
Yeah, so I just want to dig deeper into your blog, right? So your blog is mainly on a Chinese audience, right? And like what are your thought process behind like starting the blog itself initially, and how long was it ago?
Yeah, so I think the thing is, right, so I've been investing for quite some time. I've been learning about various stock investing method lah, right? If you know a little bit about stock investing, there are like many school of thought, many different type of guru talking about different things, and there's no one answer. Right? So there's like value investing, there's like people who do trading, then there's people who do growth investing, all sorts of things. Right. So I've tried I would say I tried most of all already. Then ultimately I found out, right? So the only investing method that works for me, right, is actually ultimately dividend investing, which is actually the simplest one, which is
Okay.
actually the easiest to start. But I've wasted so many years, right, just thinking, trying to start different things lah. So ultimately, I think it's a kind of like a journey to kind of when I'm writing about blog, right? So it means that I need to be somehow, responsible for myself and responsible for the audience also. So it forced me to double down on my dividend investing journey. That's one of my personal goal. And then secondly is that I want to show the world, right? You don't need to have like a lot of money to actually start dividend investing, right? Dividend investing is something that's very easy to start, very simple to maintain that almost everyone can do it lah. And then ultimately, if your goal is to achieve free financial freedom, right? That's probably one of the best route to do it already lah. Yeah. So
Yeah,
that's
so
how I
I think
started.
that's a great segue to like our main topic for today, which is
Yeah.
like property related, right? I just as yourself as like a stock dividend investor, what are your thoughts on like property investing?
Okay. Yeah. Honestly, right, I think since my goal is about achieving financial freedom, right? So if you want to achieve financial freedom, usually that means you need to have your how to say your passive income higher than your expenses. Right? That's what all investor like financial freedom people they go after lah, the fire people. Right.
Yeah.
So actually you're right. I think dividend investing in one way. Actually, property investing is another popular way that a lot of people are doing it lah. Right. So personally to me, I think property investing, I wouldn't say I'm very like familiar with it because I never actually invest a lot in it. Don't want to say for sure that okay, dividend investing is better than property investing or things like that. But to me, I'm a bit biased, but I think dividend investing is a lot easier to start. Right? So the
Mm,
cost to start is actually much lower. And then the knowledge that you need to start dividend investing is also a lot lower. Right. So,
mm,
so I think one thing I'll share is that property investing is a lot more localized, right? So a lot of things you need to go and study that area, you need to understand the
mm.
area really well. But then for dividend investing or stock investing in general, you just need to kind of sit, just sit at your desk, right? And then do some research online. Right? There's so many resources online. So I think it's more beginner friendly, if you ask me. Yeah.
Yeah, definitely, right. So I think property is something that is super highly leveraged product, and like
Mhm.
it's not something that you can straight away just without doing any research and just buy
Yeah.
and hope for the best, because ultimately it's like a 35 years loan kind of thing, right? But again, like so I'm just want to ask, like, are you currently renting, or you actually bought a property, or what's your arrangement currently?
That's a good question. So I personally are renting uh a house. So I
Mm,
think most of the reason why I do that, right? I think it's a deliberate decision that
mm,
I made, right? I
for
don't
sure.
want to buy a property. I might be the because I think people around our age, right? Around our age, right?
Mm,
Usually they
mm,
are starting, into thinking, oh, I want to buy a property, and then actually a lot of them are already buying it lah. I think
Mm.
I'm a bit of a special breed where I deliberately don't want to do that. Right? So
Yeah,
I'll
can
share
I double click on that? Like how what like, I would just want to understand like your thought process of like why deliberate. So are you thinking of more like um I forever don't want to buy a property, I will just rent forever, or what is the plan here?
I wouldn't say that I forever wouldn't buy a property lah, right? So to be fair, if I getting married, I want to build a
Mm.
family, definitely I would need
Yes.
a house, right? So, but
Mm.
it's just that at this point of time, I'm not at that stage yet lah. So this
Yeah.
hasn't actually crossed my mind. So I think for family matters, definitely I'll buy a house. But if it's
Mm.
not for family matters, right, I don't see myself buying a house at least for the next few years, right?
Mm.
It's a deliberate decision because I want to focus on my kind of like dividend portfolios, lah, right? So for the money, if you imagine about it, right, think about it, for paying for a house loan, every month you're going to spend like at least 2K, 3K, like minimum, like just pump it into the housing loan. It's a high commitment for like 35 years. Right. So my thought process is that number one, at this point of stage, right, I want to focus more on my career. Right. I might be,
Mm.
exploring different career in different areas, like let's say KL. Right. So I've seen friends, right? They work, for example, they already bought a house, right? So they will stay in the house. You already bought it, but you won't be renting anymore. You stay in
Yeah.
your house. Let's say your house is in Cheras lah, right? But
Yeah.
then you found a job in Klang, right? Takkan you want
Oh,
to
shit.
travel
Yeah.
every single day, right? Yeah. So
Yeah.
you either give up that opportunity, or you either have to like travel, very painfully every single day lah to your office lah. So
Yeah.
that's one of my decision. I want to make sure that I have that
Flexible.
freedom to explore. Yeah,
Yeah.
flexibility. Yeah, yeah. That's
Yeah.
that's one reason.
So let's say I just want to like reiterate also because like I think buying a property, you are right lah. You are spending like 2,000, 3,000 a month at least, throwing to a property for 35 years. That actually reduce your asset building lah, asset building of like your portfolios or whatever. But again, there are a different school of thoughts, right? Where okay, I'm someone. Let's say I'm someone that I don't know anything about investing. I'm really scared. At least property is something that they can see and
Mm,
they treat it as okay, I am actually building my equity over time. For example,
mm,
let's say currently I'm renting for like already 2,000 a month with my partner,
yeah,
let's say, right? Then the monthly installment is let's say 3,000 plus,
yeah,
right?
yeah.
So basically, okay lah, I'm just treating the 2,000 as a rent and then 1,000 is actually my investment or like,
Mm,
just like my stock investment. What do you
mm,
think
mm.
about that?
Actually, I think that's a pretty fair thinking as well, lah. I believe that's actually what most people are thinking about.
Mm.
And so it actually makes sense, like if you think about it, the way you go, I just pay a little bit more just to top up to actually own
Mm.
a home, right? It's not like I'm
Mm.
paying for my owner, and then the owner ultimately own the home after like 30
Yeah.
something years. So I think that
Yeah.
that actually it makes sense one lah. So I think to make this decision, right, I think it differs from person to person lah. My personal kind of like formula is that you need to see, what is your rate of return, right? Because if for certain people,
Mm.
right, if you know how to invest, you can get rate of return up to like 10% and above. It's
For
it's
sure.
pretty normal for a lot of investors. But then for a lot of people, if you do not have other options, right, you do not know how to invest, right, you only put the money into like, for example, like FD lah, 3% plus, right? Then your return is actually much lower. So in that
Yeah.
sense, like maybe properties return is higher than your usual return rate, then it makes sense for you to put that money into like a property own a home lah. But then if you are an investor that you are already earning like 10%, 20%, right? You are
Mm.
earning so much there. If you put it into the property, it might actually slows you down, right? So it depends on
Right.
like personal circumstances also.
Yeah. So I think there's also like some thoughts on like the leverage part, right? Some people be thinking I'm actually not using my money to invest ma. So for example, let's say I'm a property investor, right? Some people
Yeah.
will say, okay, I pinjam 90% from the bank. I
Other people
only
money lah. Yeah.
get other people money and then
Yeah.
I rent it out. Okay, it doesn't cover my installment, at least it cover my interest. And then
Mm,
it builds equity over time, over time, over time. That's where like, okay, basically, let's say the property on average increase 3% a year, let's say,
mm,
right?
mm,
But again, because it's a 10 to 1 leverage, so
mm,
basically, your scale of money, right? Once you sell, right, you are using like one to get 10 times the gain. I think that's the thinking of property investment lah. But again, I think a lot of people don't think when economy downturn, right? the 10 to 1 property leverage, right? It will turn you around, right? So
Yeah,
when
not
when you
against
when
you. Yeah,
it will
yeah,
turn against you. So this is something
exactly,
that I think
exactly.
a lot of people don't really think of lah. But again, I'm on the side of buying a property.
Yeah,
I'm on the side of buying property, but again, it really, really depends on who you are as a person. I wouldn't say a blanket, everyone should buy a property or everyone should rent, right? To me,
mm,
it's really and for example, if I'm someone that is single and I actually don't need much. I actually don't need much. Why should I buy a property
yeah
of
lah.
like
Why do
three
you want to dig
bedroom?
a grave, right? And then pay for that
Exactly, right?
so much money, right?
Exactly. If I'm single, maybe I can get by with like a 800 ringgit a month out room. I am
Yeah,
fully sufficient. I can go to the work, I can do my work, come back, relax, that's all, right?
yeah,
But again, as time goes by, right? Uh you have family, then that's a totally different story already. Because that's
yeah.
where the rental and the installment parity started to close the
Yeah,
gap already.
exactly,
Yeah,
exactly,
yeah, yeah.
exactly. Because you're not paying for like one person, you're paying for two-person already, ma. Right? So
Yes,
you're paying
yes.
for one person. Imagine it like I want to rent a whole house, lah, right, for 2K, lah.
Mm.
I think it's a bit too expensive. If you're two-person, then
Yeah,
at that
exactly.
time it actually makes sense. Yeah. If you're building a
Yeah.
family, it makes sense. Yeah. Yeah.
What are your
So
thoughts of like let's say recently, right? I have looking at different property launches and they are actually okay, the price actually never changed, right? The absolute price never changed, but the size is getting smaller. So I've seen like a lot of property developments, they have already started to cater to single person one. So they are
ah
actually bridging the gap between the renting and also buying already for single person. For example, right? Someone can buy a 300,000 but 500 square feet lah. 300,000
mm,
but 500 square
small
feet
small one, right?
property,
Yeah.
one studio or 1 bedroom apartment, which is kind of like a 1.5k punya installment lah. So like it just developer is trying to bridge that gap already lah. That's
Yeah.
all. Yeah.
Yeah. So I think yeah, I think that's a good observation. It seems like a lot of time, right? I think the property prices kind of like stay around, 500K, 600K. I think in Klang Valley area,
Yeah.
like if you go slightly up, right, more than that, I think it's not very affordable anymore, especially for young people. So I think
Exactly, right?
like
Yeah.
yeah, like you said, so they make the size smaller, so that people can afford it, lah, at least, right?
Yeah.
Yeah, but I feel like it's a bit how to say for me, personally, I would rather have a bigger house. I actually like bigger space. And if
Definitely.
you ask me to stay in like a 500 square feet house, I personally
Yeah.
cannot like, especially if I'm paying like a few like 500K, and living in even in city center, right? I don't feel like it. I personally prefer to live in like a bigger house. So most
But
likely
I
I
do
will be the type of
mm,
person that live further away, lah.
but I do
Yeah.
see, right, like KL is actually going towards the urbanization of like towards like New York, towards London
Mm.
area. I wouldn't be surprised, right? Where I mean there are already data showing that people nowadays are going towards the city center and it's always increasing, right? And I wouldn't be surprised where the government will be start implementing, for example, search charges when you drive into the city center, just like London did,
Oh,
just like
yeah.
whatever New York did, right? And the
Mm,
property prices will be appreciating over time lah, on that
true,
part. But again,
true.
I think Malaysia is kind of blessed yet not blessed, right? So Malaysia has a lot of land. It's just that everyone wants to be on the same plot of land.
Consider in Klang Valley there,
Yeah.
consider
So
Penang
so so
Island.
let's say you are a Penang Night or you are a Klang Valley person, right? And you want to stay in that Klang Valley or Penang, right? I do think that's a hot take from me, lah, right? I do think that Malaysia property is more expensive than Singapore. What do you think?
Oh, really? Why? Why do you think so? I'm very curious because
Okay.
as you know, Singapore is crazy expensive. Right? Even if
Mm,
like people who rent there, right? I think their rent, I think for last year, right, just increases. Like I heard like friends that say that rent increases by like 40 by 50%. It's pretty normal.
yeah.
And you're telling me that Singapore it's cheaper than Malaysia? I couldn't see
I got a, I
the
got a
connection
hot
there.
take lah.
Would you
Maybe
mind to
some
share?
people
Yeah.
will complain lah, right? I got a hot take
Um,
because okay, let's think of Malaysian citizen as well Singapore citizen lah. Actually, on an average Singapore citizen, you can never hear them say the word I want to rent a house. they will always buy a house and they are always the highest house ownership. Okay. Let's take a look at HDB and also let's say our PPR lah. But okay. But again, our PPR is very hard to get one as it's just Malaysia lah, right? It's just a bit hard to get. So let's say condo versus condo lah. Condo versus the HDB lah. More comparison where most of the Malaysian will buy condo and most of the Singaporean will buy HDB. Even though it's not really apple to apple, but we kind of compare the cost of living kind of thing, right? So what Singapore did very, very well is that actually they don't really need to pay that much because the absolute price, right, dollar to dollar, is very affordable. And it's both parties that is contributing and they are able to pay using their CPF. Actually, right, most Singaporeans they don't, once I get a salary, right, they don't take the one chunk of it to pay installment one. They don't. The money is just at the back.
Yeah.
It's just at the back, right? I mean, there's pro and con. Maybe the CPF money will be lesser over time. But again, the absolute price are actually around the same one. Like HDB maybe like 600K, 700K, right? Dollar lah. Then you are earning like let's say 4K. But then for Malaysian 4K, right? You buy 600, 700K property, right? It's like a
I don't think it's sustainable. Yeah.
And like for example, it's very normal. They're like a social norm lah, right? Singaporeans it's normal to stay with your parents. It's normal to stay with your parents, and it's so small, right? You don't really exactly need to find a place to rent because no matter what, it's there within 1 hour only, right? But Malaysian, let's say right, Malaysian, right? Let's say you you are born in Kedah or you are born in Kelantan, right? Or then you work in KL, you die have to rent. You no matter what have to rent. So when you rent, right, actually your monthly commitment is already there already. Then
it takes up at least like 20-30% of your salary already, right? It's a fixed cost already to you.
So averagely, right, I can say average Malaysians are much poorer, not in terms of currency, even 1-to-1, right? Average Malaysians are much poorer compared to Singaporean. And we haven't even talked about car yet, you know. Yeah.
Right? In Malaysia, I think
you have to buy a car.
Country with the highest car ownership. You have to buy a car, honestly. Unless your job is in like maybe
Remote
like KL area where public transport is still better. But if you are in like outskirts or what, right, definitely you die also need to buy a car. Yeah, I agree. If you think about it that way, you put it that way, actually it makes sense. Like Malaysian, although our absolute price is lower, but then if you consider all these like living needs, right, where you need a car, where if you're from like a outer, you're not from Klang Valley, but your job is in a Klang Valley, then you pay extra for all of this, right? And to be honest, Malaysia's salary is much lower also, right?
Yeah.
I think so if you consider all this, I think you're right. Malaysians are generally, more cramped financially.
But somehow Singaporean are more stressed. Somehow Malaysian be like, it is what it is, It is what it is. Happy go lucky, which is a good thing lah. But I do think now that Singapore and Malaysia, right, has such a great disparity in terms of currency, right? And I'm just worried about Johorians, because Singaporeans are starting to look at Johor properties, and as you know, they are gonna bring inflation into the state and the country already. Because no matter what,
I mean, we have the forest city there, like you couldn't even sell it, right? So I think if Singaporean come in and buy it, I think it's good for us, lah. At least
I mean, it's good, right? But
area,
it's good, lah. But just that we build for other people, not for us. Like we spend money, but for other people. I mean, obviously we do earn, right? But the purchasing power of Singaporeans coming in will kind of bring inflation to me, lah. Like, so if I imagine myself as a hawker in Singapore, in Johor, right? Why do I want to sell my pan mee at 8 ringgit when I can sell it for 12 ringgit when all my Singaporeans are coming?
Okay. So when you're talking about inflation, you're not just talking about the property thing, but the
all the cost of living.
Okay.
Yeah. Even housing also, right? Let's say developer, I could demand from Singapore. Why the hell I want to sell for Malaysian? Why do I want to target for 500,000 when I can target for 1 million? And 1 million is nothing. Right.
True. So you mean that it will actually like crowd out like certain like a Malaysian from that area, maybe it will be maybe that area will be dominated by, the richer Singaporeans, and then Malaysia will need to
Mm,
force to either you work in Singapore also to get the high pay, or you either go,
yes.
further away from that area lah.
Yeah, yeah,
Okay.
yeah.
Okay,
Yeah,
okay.
actually,
Curious to
on
know.
top of your, I want to turn it back to like your investment portfolio, lah, right? So you are a dividend investor, and some of the, I'm pretty sure some of your portfolio include REITs as well. Like, what are your thoughts also? Because it's kind of also a property investment.
Yeah. Good. I think good question. I like REITs a lot. I think majority of my portfolio is actually in REITs lah. So you can go to
Ah,
StocksPal.com, and I share
mm,
what's my breakdown of my investment. You can see that up to, I think probably up to like 40-50% is in REITs, right? So just to share with everyone, if
yeah,
the audience don't know that, REITs stands for the Real Estate Investment Trust.
yeah.
Basically what you do is like you actually own that property through that trust itself lah. So let's say I give you an example. If let's say everyone, we go to Sunway Mall lah, Pavilion Mall, right? Pavilion KL Mall. So the Pavilion REITs itself will be owning and managing that mall. And then we as an investor, right, actually own a piece of it, and you are like a 包租公包租婆 lah, right? People say like landlord lah, right? So you just
Landlord, yeah.
collect the yeah, just collect the money, the rental from there. So I like REITs because, right, it's super, super stable. Because for those malls, right, usually you sign contract, you sign for like maybe a few years, like things like that. So the return is very stable, number one. And
Mm.
then number two, right, because REITs, they will give out most of the money, most of the rental fee that they earn one, which is why it causing
90%, right?
because it's like yeah. So I think there is if REITs pay 90% of their money out as dividends, right, then they can maintain I think government will give them some special benefit, like give lower
Oh,
tax one. So
oh,
if they want to
really?
maintain that status, so if they want to maintain that status, they will pay out majority of the money that they earn. So which is why the dividend yield is very, very high one. Usually it's not uncommon to see something like a 6% and above one.
Mm,
Yeah.
mm, mm.
So I like it a lot because it suits my kind of like style.
Yeah, because I haven't owned any REITs yet lah. For me, I'm more like in Malaysia context, I'm more like a bank. I like bank dividends, right? But I mean banks. So typically, when banks give out dividends, right? Obviously the share price will reduce. It's same as REITs as well.
Hmm.
So if you say same on the REITs, like how is the performance like in Malaysia REITs versus in REITs context lah? Since you have started, you said your majority of portfolio is in REITs versus like let's say
Yeah.
banks, for example.
Yeah, I think generally for the past few years, right, I would say actually I think their performance are pretty similar lah, because I started majority of my investment during that COVID era. So
No,
after
that's the
COVID
best
era,
time. Yeah,
yes, because it's super cheap, right? If you think about it, right,
yeah,
all those REITs, for example, the mall REITs, right, Sunway REITs, Pavilion REITs, right, during COVID, right, no business. Then
correct.
I think Pavilion is like dropping from like 1.8 or 1.9 ringgit down to like 1.2. Right? So
Wow.
that's the time where you can pick it up very, very cheap lah. So that's where I start to pick it up lah. I think if I'm not mistaken, my lowest cost is like 1.21 or something. It's pretty
Mm,
low. And then when everything recover a few years later, right? So let's say like now 2023, 2024, everything recovers already, right? The business come back already, right? Then technically, right, you get a crazy high dividend yield from that lah. Right? So
mm,
that's why I think sometimes, right, I can also earn some capital gain from this kind of arrangement. Not necessarily that if I'm going for investment for dividends only in risk, but actually if you are good at spotting this like
the
arbitrage
when the good
opportunity.
value, right? Yeah,
Yeah. So you see good value, you can just buy and then just wait a few years, and then because as we know lah, Malaysian loves shopping lah, right? Malls are keep coming up, right? So I think it's a matter of time that they will recover one. So that's why I go into risk. And when you say compared to bank, I think it's pretty similar also, because after COVID, I think banks
yeah.
recently, especially I think 2023, right, what their return, their profit is like, I think all-time high profit lah. For
Yeah,
Maybank lah, I think RSB I'm not too sure, but Maybank definitely is all-time high.
all time high.
Which is
Yeah.
why you see the Maybank's share price, right, go back to the peak already.
The almost 10 bucks. Yeah.
Yeah, 10 bucks already.
I was buying. I mean, during COVID, I've run out of bullets, to be honest. But I bought it at like 8.6, and then it dropped
That's pretty
actually
good.
slightly,
Uh,
and I was waiting for it to drop to like 8 ish so that I can buy it lower, but it just went going up. Yeah,
Yeah, I think
now it's
Maybank is
like
blue chip lah, right? Yeah, blue chip lah,
yeah,
very hard to drop a lot. Lah. Yeah.
yeah, it's crazy. It's crazy how it
Yeah.
climbed over time lah. Yeah. So
Yeah.
so so REITs.
Just yeah. Just curious,
Yeah,
right?
just
For yourself, do you see yourself going into risk also? Because I think for property, right? If you're interested in property, actually risk is a good way to kickstart because the cost is low and then you don't need to take a lot of like because you buy a property, right? There's the liquidity issue, right? Sometimes you want to sell, it's
yes.
not so but then risk we can just sell it every anytime, lah, right? During a work day, right? Monday to Friday, anytime you can sell it, right? What do you think about this? Like, would you see yourself like going into risk also?
So it really depends, right? So for me, as far as I know, right, a REIT's dividend yield in Malaysia is not really that high lah. I can say maybe
Mm,
like 4, 5% each. Maybe some can give higher, which I don't know. None of my
mm,
it's
mm.
not my expertise. But I think for me, right, my internal rate of return targeting is at least 6% to me.
Okay,
To me
okay,
lah. So
okay.
like I'm looking at, let's say, Maybank, for example. It's a great example, right? I close one eye and no matter, I trust them, they give you 6, 7% at least. I trust them.
Exactly.
And I close one eye also AGM and they give me 50 ringgit for fun, right? Just
Mm,
like that, right? So I
mm,
think I think I am looking at REITs because, if as far as I know, REITs gives more frequently, the dividends give more
yes,
frequently.
yes.
But I think it comes with the dividend yield slightly lower lah. So
Mm, mm.
what is your target and what's your internal rate of return for you lah? Just want to
Sure,
gauge.
sure, can. Yeah, actually I wouldn't say REITs the return is lower. So actually
Mm.
when I bought my Pavilion REITs, right, actually my
Yeah.
dividend yield is about 7% and above.
Wow. Okay.
So because my entry cost is low, right? So I think
Right.
I
Oh,
think you need to
dividend yield
learn the
on
sport.
cost. Right. Right.
Yes, yes, because what is the price that you buy that REITs, right? It will affect what is the ultimate dividend yield that you get, lah, right? So the lower the price you get, actually the higher the yield because when they pay dividend, it's a fixed amount, ma. But then if your cost is lower, then definitely that means that your return is higher, right? So I think at this point of time, right, REITs doesn't necessarily mean that they're lower than Maybank. I believe Maybank dividend yield now is like 6%, about six
Mm.
or six. I think
Six. Yeah.
last time it was like 6.5 and above, lah. Now it's like
Yeah.
dropped to six already because the price has gone so high.
Correct.
Risk for example, Sunway risk and Pavilion risk, you still can get it at about 6% and above. So they're on par with Maybank actually.
Wow. Okay.
Yeah. Yeah. But I would say usually like REITs, they are more stable and then their profit won't be like, suddenly increasing by a lot. Lah. Like for bank, right? If your business is good, your loan is performing well, then actually you can still increase. I think Maybank actually net profit increases by more than 10% lah, since last year. I think for a bank of such a size, right, you can increase your, profit per year by 10%. That's amazing, really. If you continue for like many years, you can actually grow
Yeah.
one, right? But for risk, it doesn't work like that. Like risk usually is lower growth.
Do you explore overseas REITs as well? Like, let's say some people say Singapore REITs are much better quality compared to Malaysia REITs. What are your thoughts on that?
Hmm. Uh, I I thought about investing in like a US one, but not Singapore one at this point. Like, okay, to be honest, I shouldn't say for Singapore because I don't understand the Singapore risk market enough. Like, I
Mm,
know there's
mm.
like quite some risk that's quite okay one, but personally, I want to invest in the places where I understand the most. Lah. In Malaysia, I've been to all these malls, right? Sunway lah, Sunway Pyramid, Sunway Carnival in Penang. I understand all these malls, right? I can go and then see how's the crowd there during the weekend. You want to buy Mid Valley also can, IGB rates. So I like to be able to be part of this kind of like to actually go to the ground and then see how is it performing, right? Because it gives me confidence a lot of time. So if
Yeah.
it's
How,
like
how, how
Singapore, I
do you
don't invest
value
so
property REITs? Like, I'm just curious, like, how do you value property REITs?
what do you mean by value? Like
So for example, right, how do you know like this REIT is a good quality REITs versus, like, let's say I give you an example of Puff REITs and Sunway. On
hmm,
outside, right, I see Sunway is doing good because our Sunway got so many projects, so many different property, different malls, got city itself. And Puff REITs is Pavilion, no? And then Pavilion
hmm,
maybe Bukit Jalil is not doing well, for example,
hmm.
right? But maybe Puff REIT is performing better than Sun REIT. So I'm not sure how do you value and compare these kind of REITs lah.
Yeah, I think REITs, in Malaysia, I think there are just less than 10 REITs lah. So if you want to compare them, it's actually not that hard. So
Mm.
there are a few categories of REITs. There are certain REITs that, for example, the shopping malls one, like for example, Pavilion REITs, it's heavily invested in like retail shopping malls. right? So shopping malls, right, is very sensitive to, for example, like consumer sentiment, lah, right? For example, during
Mm,
COVID, you die already.
yeah.
Right? So that one, yeah. But then there are also other side of the risk where there are people that do office REITs. Office REIT people usually sign like a contract, one
Yeah,
for
long
maybe
term. Yeah.
longer term lah. It's more stable. But personally, I don't like office REIT because, as you know, we have a office overhang in Malaysia
Yes,
where
yes.
it's very hard for you to increase the per square feet punya rental. So I
Mm.
don't want to invest in office REIT because I think a lot of companies, especially the
Work from
more
home, right?
you work from home already one. You don't
Yeah.
really need big office space one, right? So
Yeah.
I'm not optimistic towards office, but I'm still optimistic towards, like, for example, retail lah. Like shopping malls is still coming out like crazy, and then you see like all the big malls especially are actually doing pretty good over time, right? And the question that you ask is, how do I value them? How do I compare them, right? So I would say that I think you will know one. You just ask people what is the most frequent mall that you go to, right? People will always say it's either Sunway Pyramid or in Sunway, it's either Pavilion KL, or now we have TRX. TRX is not in any REITs, but yeah,
Yeah.
I think just to give you a quick kind of like example of if people keep mentioning that mall, right, that this like very very high quality mall, right, they command the interest, command the attention of all over Klang Valley, man. So for example,
Mm.
I think Pavilion KL, all over Klang Valley people will go to
Everyone
Pavilion
know.
KL.
Correct.
Everyone, like,
Yeah.
even international visitors, they will all go to that place, right? It's just that
Mm.
special, right? It's because of that positioning that they have, right? It makes it into a super profitable business, lah. Right? So if I'm talking
Mm.
about tier one mall, I'm looking at all these like good malls,
Ah,
right? People know about them, yeah. Yeah.
right.
And
So
of
it's
course, when you think about investing, we need to look at the price also, lah. Usually this kind of mall very expensive, right?
yeah, understand.
Sorry, yeah.
Okay. Yeah, 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 yeah. That's quite insightful. So like in terms of your strategy moving forward, right? Like in terms of, are you still looking for how often you invest in REITs, or how often you invest? Is it every month you get a paycheck and you just throw in, or you wait for opportunities? Like what is your strategy moving forward? Just want to get like have a rough gauge on this.
Good question. So I do every month, right? Instead of because just now our topic is property, instead of paying like
Yeah.
2, 3K every month into my property loan, I actually put aside this money into my stock portfolio instead, lah. This is my alternative.
Is
And
it
so
like a
I
cash
put
account, wait for a good timing, or you just buy?
yeah, I put it in a cash account. I ready the cash first, but I don't
Mm.
usually buy every month, right? I look at the opportunity. Right? Because a lot
Ah,
of time, because it is an open market, right? So the pricing will go up and down from time to time. And sometimes you just, if you are be patient, right? For example, let's say Pavilion REIT, I give an example. Lah. I think somewhere in last month, the price go up to like 1.44 or 1.45. Right?
yep.
But then now it's like down to 1.37 or 36,
Mm.
right? So it's just if you can wait for a few weeks, right? Sometimes you can just get like a
Much
few
lower
percent
entry.
cheaper already, right? So you can get like 5% cheaper just by waiting for like 1, 2 weeks lah. So I don't usually put in like at the exact date I need to buy something. I look at the price that I like. Then only
Mm.
I buy it lah. So that's my strategy to kind of lower the cost, because in dividend investing the lower the cost, the higher your dividend yield lah. So that's the
Definitely.
strategy. Yeah.
Mm. So like, is there any like target in mind, or like until so I would just want to tie it back to like property back, right? So is there like a target in mind until like, oh, my portfolio is enough already, okay, maybe I can start buying house already. Like I just want,
Okay.
yeah.
Yeah, I think this is yeah, I think we talked about this separately on my strategy
Mm.
here also lah. So I think this is a hot take also. I don't think many people can accept what I'm going to share later. But I'm going to share anyway. You can judge for yourself whether it makes sense or not lah. Right. So for me personally, right, because this hot take lah, I'm not sure if I don't think a lot of people can actually accept it, and I don't think it actually applies to everyone. There are certain criteria that you fulfill to be able to do this. My hot take is that if they are using, because I'm a like dividend investor, right? So I
Mm.
put a lot of my money into my dividend portfolio. And then and the question they will ask, right, is that will I ever go and buy a property
Yeah.
anytime soon now,
Yeah.
right? So to that question, right, I would say, right, what I will be doing is the proposal that I will be having is that if you actually put a lot of your money into your dividend portfolio for over the years, maybe you might need some longer years, like maybe 5 years, 6 years, 8 years, 10 years. right? If you put the money into a dividend portfolio and you let it grow, so my dividend portfolio currently is growing at about 7 to 10% a year lah. So the
Wow, that's
six to
great.
seven percent is actually 6 to 7% is actually coming from the dividend itself, and then the rest of it is like capital appreciation lah, because the company earn more and more money, and then they invest more and more. Right? So
Mm,
it's normal, quite okay, quite. I wouldn't say it's like impossible to get up to like 10% a year. So I will be growing my dividend portfolio until it reaches the size of, let's say 500K. Right. So
mm,
500K, let's say my property that I want to buy is also 500K lah. Right. So what I do is that just with your dividend portfolio, if it reaches 500K already, right? Then technically if I use my usual dividend yield that I aim for, like, I aim for like 6% dividend yield.
mm.
So 6% of that 500K, it's like 30K a year. Right?
Yes.
30K a year. 30K a year means that it's about 2.5K a month lah, on average. Right? So if you think about it that way, if you're buying a 500K property, the loan payment that you're going to pay, right, is also about that amount. It's actually lower, like maybe
Yep.
2.2K or so. And then you couple that with some maintenance, right? It's actually about 2.5K
Yep.
also. So what that means, right, is that I'm actually using my dividend portfolio to actually pay for the house that I'm going to buy now. So it means that I have no commitment
Commitment.
at all. Yeah, because the house pay the dividend portfolio pay for the house itself already. So I do
Mm.
not need to bear that commitment. And I see that as a very kind of like a lower risk thing to me, because I don't want to be like, wow, okay, I hate this job, I cannot leave my job, but then I still need to stay because I need to pay the house loan, for example. Right? Or if
Mm.
I suddenly lose my job already, then I need to think about how do I pay back the housing loan commitment lah. So if I'm doing it this way, to me, it's a very kind of low risk way to achieve it lah. It's actually a hot take. I know a lot of people will ask. I know probably Rodney will ask me, "Hey, how are you going to get 500K in the first place?" Right? That's the crazy hard way, right?
I think 500K isn't a big number, to be honest. Like I mean, as you grow, as you work, as you start investing, I don't think that's a problem. I
Mm.
think it's just a matter of time, right? It's just a matter of time. I'm pretty sure. Yeah, I mean, you have already have, like, let's say, a six-figure portfolio. Growing to 500K, I think it's just getting easier and easier over time, compound interest, right? So
Exactly.
I think it wouldn't be. I think it's quite smart. Like your hot take. I don't think it's really a hot take. I don't think it's a hot take, but it's just a unpopular decision that people will make. I don't think a lot of people will think about this. I think it's quite smart. I just worried about number one, yes, how fast can we get into 500K? That's number one.
Yeah.
Number two is, can we make sure that 500K, let's say if you say you're gonna manage to 500K in, let's say, 10 years, right? 10
Mm.
years, let's say you are how are you again, 29?
Yes, yes.
Let's say you're 29, maybe 10 years later is 39. So when you're 39, are we comfortable in buying a 500K property at 39 years old, and the property might be smaller, right?
Exactly.
That
Yeah. Or
that
even
that,
going
that,
to the
that
same
that's
size is more expensive.
yeah, that's a conundrum lah that I kind of think, right? So for me, right, I think it's a great strategy, but I think the person itself must need to be disciplined to invest. I think
Mm.
a lot of people actually, they say they invest, right, but they don't have discipline one. They don't have
Mm.
the discipline to invest, or they think, okay, like, I'm still young to invest. They just don't want to
Mm.
grow the. I think for me, right, um how to know someone is ready for property, I think, is firstly definitely have the good income. That's number one.
Yeah.
At
Agree.
least you don't tell me
No
you earn
overhead
like four,
commitment.
5K, then you want to buy a 600,000 property. Lah. To me, that's unless you got pharma, that's all. Unless you got pharma, unless you got
Yeah.
pharma. We are talking about individual here, lah, right? But I think firstly must have a good job, number one. Number two is really, to me, right, if you want to buy a house, you at least need to have a six-figure portfolio first, at least. Because, like, for a
Hey, but not
six-figure,
easy, you know. I say a lot of people, not easy to achieve for many
it's
people.
not
Six
it's
figure.
definitely not easy. It's definitely not easy, right? But to me, a six-figure portfolio, at least, right, it you know that it will grow much easily. The first 100K is super fucking hard, right? It's super extremely
Mm.
hard. But to be honest, the next 100K, maybe it takes you like 5 years to get your first 100K, right?
Mm.
But if in reality, maybe the next 100K, it might take you 3 years,
Exactly.
or even
Yeah.
less.
I think that's the experience that I experienced also lah. So
Yeah, yeah.
getting
So
faster and
so
faster.
yeah, so to me, like the criteria is really to have a number one, a stable and good job. Number two is have ready of emergency fund. Number three is have a six-figure portfolio. Then you weigh the pro and con. Lor. To me, I don't think we need to wait until 500,000. Then to me lah, it does don't need to wait until 500K because to me, right, maybe if I wait until 500K, then maybe I
It'll take
more,
too long, right? Maybe you
it will
lose
take
the
too long.
opportunity. Yeah.
Yeah, so as I said, so you must also kind of match the opportunity also and the stage of life, right?
Mm.
So let's say maybe I give you another 2 3 years, then maybe you found someone your partner already. Then suddenly you want to be together and
So
have
I might
her. Then
buy this,
suddenly like
buy the
your
house
your your
already.
your
So yeah,
strategy like is all gone already. Okay, shit.
yeah,
It's
yeah,
like
yeah.
property is itself is we can rationalize it, but in the end of the day, it's still an emotion kind of thing. It's still a stage of life and an emotion kind of thing lah. So yeah,
Agree. Agree. Sometimes, if you reach that stage already, you cannot run away from it, right? So you cannot just be like, oh, I just want to, stay true to my strategy until I don't want to get married lah.
must be
Cannot lah, right?
flexible lah. Must be flexible
Yeah,
lah. Yeah,
yeah, exactly,
because
exactly.
there, I
So
do I do have friends right. They are very Bible, so they are very strict to their point of like, okay, this in my twenties, I'm not gonna date anyone. I'm not gonna go out. I'm just gonna save up as much as I can. I'm gonna invest as much as I can, grow the portfolio, and then after that, maybe if I got money, then I cash buy the house. But I think realistically, not really sound realistically,
mm,
because in
mm,
the end of
mm.
the day, you are losing a lot actually. You are losing like
Yeah, life,
timing,
life experience.
your life
Yeah,
experiences, like building your own home in your 20s or 30s is different than building your home in 40s. I'm pretty sure, right? Most of us, if you have a good job, stable job, right, most of us can cash buy a property when we are 40. Definitely no
mm,
problem, one, right?
mm,
But the
mm.
thing is, it's slightly different. Like building a home in 20, 30, or straight away cash buy at 40 is a totally different experience also. Lah.
Yeah, exactly, exactly.
Mm,
Yeah.
mm,
But I think if you're talking about the audience, because I think based on the strategy I shared just now, right? Actually, to
mm.
achieve that, right, there are a few criteria. One, I just want to bring it
Yeah,
back a little
yeah,
bit. Just want to clarify a little bit, lah, because I think not everyone will be able to do that because it's actually quite challenging. Also, I think number
yes,
one, right, you need to. There are two criteria, two hurdles that one needs to resolve in order to achieve that. I think number one is that you need to have a relatively high income level,
yes,
right? Because the thing is, right, we all need to spend money. Expenses is there already, right? I mean, no inflation, it's always there, one, right? So your income needs to be high enough, and then you need to be disciplined enough that you will always have that savings rates that's being like a portion of your saving is
mm,
being put to like for example a portfolio or something lah. Right. So I think if you are a person, because there are a lot of friends that go to Singapore and work, right?
yeah,
So you earn 3.5, the exchange rate is already there, you earn a lot already. So these people actually they fulfill the first criteria already. One. So they
yeah,
will be having high level of income to do that. And then secondly, right, I think the second hurdle is actually one of the harder one also is because a lot of people, I have friends that say, yeah, I have this extra money every month. I don't know what to do, so I go and buy a property.
correct.
Right. So I think that is a more passive way of thinking about it. Like I think that person should actually explore a lot more kind of like option first to see what is the thing that give you like maybe higher return, and then maybe you want to go with the higher return one first lah. So I think first criteria is that you need to have a relatively high level of income. Secondly is that you need to know investment to a certain
Mm,
extent for you to be able to achieve that faster, right? You
yeah.
compound it, right? So I think these two criteria are critical lah. So only if you have these two criteria, then the strategy that we just talked about, that only it can work lah. If not, then if you miss one of it, right, I think it's super hard. Yeah.
But let's just get it real now, right? What's high income, right? So for some people, high income
Mm.
is 4 5,000. For some
Yeah.
people, I'm good in investment means I know stock. I just buy this mutual fund. I just buy it. I already know investment. So like, what's
Mm.
the definition of high 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 salary in order to do this strategy for our audience here?
Yeah. So I think the it's actually not about that salary itself, but it's more about the savings that you can have
Mm,
like it's more about saving rates lah ultimately.
mm,
So for
mm.
example, right, I do know like there are people that because stay at home and then their expenses is very low one. So let's say
Yes.
your income is like 5K, 6K, that person can still save like 3K plus a month, right? But then for some people that they are living themselves like in KL, they are from other states. Even if they earn like 10K, but then actually they have a house, they have bought a big car, things like that. Then actually your expenses is like more than 8K a month already. And
Yeah.
then your savings is just like 1K. You're actually doing worse than the first person, although the absolute income is lower. So I think the most important thing is actually the savings amount that you get every single month, your cash flow in a sense.
Mm.
Yeah, so the
What
cash flow is super.
Yeah.
Yeah.
So what do you recommend? So let's say I'm earning 5,000. Let's say
Mm,
I'm earning five
mm.
thousand. What is a healthy amount of savings rate that in order for me to execute your strategy or even consider to buy a home?
Yeah, I think just to clarify, I am not a financial planner, so I shouldn't give
But
financial
yes, for
advice.
sure. We are all
Uh,
not financial planner. We are just talking our
yeah,
own
so
opinions.
so actually, I don't think that it's a very clear-cut answer to that, lah. Because people have different circumstances, right? So
Mhm.
some people might need to support their family, because some people
Yep.
might have younger siblings, they need to support them through their maybe universities or college, and their expenses is looking very
Yeah.
differently. Some
Mm.
people live with their parents, so their cost is actually very low. I
Yep.
don't think I don't think there's a exact number lah, but I would healthily lah, I would like to say that at least want to save like maybe if you can have like 20% saving rate out of that, right? So it means that maybe you can save 1K out of that, right? It's a good start lah. I think it's more
Yeah.
realistic also. Yeah.
Yeah. Yeah, I think 20% is more realistic lah. Because
Mm.
I do see a lot of people recommending like the some 10%, some 20%. But
Yeah,
I think
start somewhere lah. Start somewhere.
starting somewhere is important. And
Mm.
really, but we shouldn't stick to the 20% only lah. So let's say suddenly you get
Mm.
promoted, then you earning 10K a month, right? And
Yeah.
then you don't tell me you save 10% lah. Come on, right? You should
You
be
can
able
save
to
more
do
than that lah.
better lah, right? Of course,
Yeah,
you
yeah.
must control your lifestyle inflation. To me, lifestyle inflation is gonna be there. We cannot
Mm,
avoid
mm,
it. And I think
mm,
we should have lifestyle inflation. It's just that
mm.
we need to control. That's all lah. Yeah.
Exactly, exactly. Agree. Yeah, a lot of people you get promoted, then you go buy bigger car, right? Then you lose all the opportunity to save more already. Then you lose the opportunity to build your kind of like portfolio or the first savings lah. I think I really like your idea, Ronnie, where everyone should have that kind of like portfolio build up, like a sum of money build up, a first capital lah. Because if you do not have that first capital, it's actually very hard for you to have more options in life, one. So yeah, if you want to invest, you need first capital, right? If you want to do other thing, for example, you want to leave the job to another job or whatever, you actually need to have some emergency savings build up also. So it gives you a lot more option. I really like that. You point this out, lah. Yeah.
Well, what do you think about people that use like their EPF account 2 and 3 to buy a property for down payment, or like they rely on that as a down payment? What do you think of that? Or do you even consider that as the first capital? Because let's be real, some people really include EPF. I maybe include in my net worth tracking also, but just that
Mm.
um, what are your thoughts on that?
Yeah, I think it's okay lah because EPF ultimately is your money
It's,
ma,
it's your
right? And
money,
then
yeah.
it's a forced kind of like savings things also. I'm really glad that we have this kind of like structure in place because if
Yes,
not, right, a lot of people won't save, right? So it actually
correct.
help Malaysia, right? So it's actually a good thing that we have EPF. But when you come to a certain life stage where you need to get married, things like that, then if you take out EPF to buy a house, I think that's pretty fair lah. That's pretty fair. So I think there are two ways to look at this lah. One is that whether you want to buy a property is for what purpose? Is it for your own stay, or is it for investment, or is it for other purposes? Like if it's for your own stay to build a family, right? I think that's always
Fair.
okay one. Always fair one. You cannot say no. I want to get
You
married, but I
you
can't
you
buy a
you
house.
cannot you cannot compare. I mean, I think the gist of it is cannot really compare Excel and real life.
Exactly.
Yeah.
Exactly. So, but if you're telling me you are going for investment, then maybe there are some points to argue lah. Because for investment, we definitely want to go for the investment that give you the highest return, right? So if property give higher return, then for sure, right, go into it, right? If other investment vehicle give you a higher return, then you should actually not invest in property. So it depends on the if it's investment that is depend on the return lah, actually. Yeah.
Mm.
Yeah.
Okay, I think we
Yeah.
have talked for quite some time,
Yeah.
almost an hour now. I think I would like to kind of wrap things up a little bit and really Yes.
Yeah, actually, sorry, one thing before wrap it up,
Yeah.
I want one more point to make. Yeah, so one
Yes,
interesting
let's
point to make that
go.
I just suddenly thought of. So because this one we are talking about investment return, right? And
Yes.
just now we talk about that property side, you have that leverage because you put down 10%, then actually you
Mm.
get 90% of bank's
Yeah.
money. You got like the 10 times leverage, lah.
Yeah.
Right. So just now you also mentioned about usually right the return from property is about 3.5%. And actually go
Yeah.
and
Let's
check
say. Yeah.
what is the increases of like
Mm.
I think property index lah in Malaysia,
Yeah.
residential property index, right? I think since 2010 until today, I think on average the house increased by 3.5% every year,
Mm. Mm.
right? So I think this is my own formula. I'm not sure whether it's correct or not. Also, if
Mm.
any audience is actually
Yeah.
very knowledgeable in this, can also correct me. So
Comment down
this is my
below.
yeah, so it's just my own thinking. It's just my own thinking. So if we assume lah, as an investment, I buy the house, all the kind of loan payment is being covered by my renter. That's the assumption.
Mm.
I assume you can cover the rental, so you're not paying
Yeah.
anything extra.
Mm.
You just look at the capital gain point of view. So
Mm.
let's say your 3.5% is the price increase that you get every year
Yep.
for your property. It I think your cost of that loan is actually important. So let's say your
Mm.
cost of loan is like 3.5. It means that you break even and then you are not getting any extra money. The leverage is leverage on 0%. Basically, the differential is 0%.
Mm.
And then if let's say the price increased by like 3.5%, but your cost of the loan is 3% only, you have that 0.5% differential every year. Then this
Mm.
0.5%, actually you need to multiply by the leverage of 10. So actually you're getting like a 10% kind of return every year. So this is
Mm.
how I agak-agak calculate, agak-agak know whether you can make money from property or not. I'm not sure this is 100% accurate or not, but this is the maybe a rule of thumb that I use. Right? So for
Mm.
example, but the reason why I didn't invest in property today, right, is because if you look at the cost of your property loan, if you go and
Yep.
search, now it's like about 4% to
Yeah.
4.25, 4.5. 4 to
Mm.
4.5 basically. But
Yep.
if you look at for the past 15 years or so, the property price increase is only 3.5% per year. So it
Yep.
means that you're actually losing 0.5 differential, and you leverage by 10, you're
Mm.
actually losing 5% per year.
Right. That's an interesting point. I'm not sure it's correct or not, but I think it does give a good perspective in terms of thinking like the cost of loan as well into the calculation. Because I
Yeah,
think a lot of property investors they do think of like, oh, I just let the time help me, people are paying them. Actually, right, I think what property investor do think is that I the cost of loan is irrelevant because because you're getting rental, the rental covers the interest already. So
yeah. So that's the
yeah.
assumption that I use just now lah. So it's like I assume that it's covering already, but I'm talking about the capital gain or leverage point of view lah.
I
Yeah,
think I
yeah.
think I think property investors they are okay. There's two school of thoughts. Some are I just want to flip the property capital gain.
Mm, mm,
Some is I just want build my wealth game,
mm,
right? So for I can say in terms of capital appreciation is long gone already. The last 10 years it's not a game for us to play. That one
yeah.
is long gone. I think the current property investment game is really to get it's either positive cash flow, which is extremely hard to get. Number two
Extremely hard.
is just I just want to preserve my wealth. It's not really making a
Mm,
lot of money. It's just preserving my wealth. So for example,
yeah.
I really don't know how to invest. I really don't know. FD, the most I know is FD, but I just want to leverage it a little bit, right? And
Ah,
I think property is
okay.
very safe. So, look, okay, I get a rental, pay my interest. So technically, I am not paying interest. I'm
Mm,
just for savings into the property. So
mm,
next time, 30 years later, I have a let's say 500K property,
mm,
maybe
mm,
appreciate until 700K, maybe
mm, mm,
700K. I can cash out anytime, or it's just fully paid off. I can let my children stay, or don't want, or I want to sell off. I can sell. I can continue rent to get the cash flow. I think that's the game there, like the long term game where 35 years later, I got a home. Number one. Number two is I still can get cash flow from my
mm,
rental, or I
mm.
can cash out anytime. But again, the
True.
liquidity is an issue lah. Yeah.
Yeah, yeah, yeah. Makes sense. Makes sense.
Okay.
Yep.
I think it's time to wrap up our conversation. It has been super, super great talking to Neil. I think any closing speech, or we can talk about any other topics the next time. Yeah.
Yeah, I think just maybe just a quick summary of what we have
Mm,
discussed today also lah. I think
yeah.
ultimately, right, whether to invest in property or not, it actually depend on what's your goal. As we said, right,
Yes.
is if it's a life stages kind of thing, you cannot run away from it, one lah. So you wouldn't go and say, oh, you shouldn't buy a property even if you're getting married. This is very unfair, right? So
Yeah.
that's not the way we are going. But if you're talking about investment, things like that, right, property is just one of the investment vehicle. So I think what I can say is that do your homework, compare, what is this vehicle bringing you compared to other vehicle that's bringing for you, and know the pros and cons and the benefits and downsides lah. I think most important is manage the risk lah, right? So a lot of
Mm,
people just think about, okay, what's the potential return, but never ever think about the risk, right? So I
yes.
think ultimately you need to, you know the best about yourself lah, right? So nobody can give you that answer, and ultimately it's up to you to make that decision and do your study. Yeah.
Mm. Yes, thank you so much for joining, Neil. That's a super great summary that you have made for the audience. If you guys want to read what Neil has written over the blog, I will put the link down below. StocksPal is in Chinese. If you don't understand Chinese, maybe you can PM Neil to write an
Yeah,
English
maybe
version
someday I
as
should write
well.
English one.
Yeah,
Yeah.
English version as well. But thank you so much, Neil, for your time. Maybe we can anytime, let's say any other topics the audience want to know, you can comment down below as well, and we might invite you back again for to talk about other different topics with all things related to finance. Cool.
Thank you.
Thank you so
Thank you,
much,
and
Neil. Thank you. Bye bye.
thank you. Bye bye.